right, all you new traders out there, I'm feeling a little bit motivated today, a little bit in a good mood that I want to help some of you newer, more intermediate traders get into the world of stats. If you're a newer trader, intermediate, or advanced, really, no matter where you are, mainly beginners who I'm talking to in this video, if you don't really know your stats and what you're tracking and how your trading is performing, you're really not going to know where to go, in my opinion. You don't really know what your average win is, your average loss is, or if you're even profitable. Obviously, most people know if they're up or down, right? You can be honest with yourselves even if you're not tracking, but if you're not, you don't really know where you're going. And so that's the whole point of this video. That is what I want to make this video about. It's going to be very beginner stuff, but nonetheless, it's a lot of things in here that I think a lot of traders don't really pay attention to. I've known some traders who have been trading for a very long time and still actually never pay attention to this stuff. And I can tell you from my own personal experience, me knowing and tracking some of the things that we're about to go over in this video made a huge difference. No matter how minimal or basic or beginnerish they were, made a massive impact on the success that I've had in the stock market, just being able to reflect and track what on earth is going on in my own personal trading. So that being said, let me make sure to like and subscribe, and let's get into the video. The first things here, if you look at my little Excel sheet, this is kind of where this is my trading Bible, right? This is where I track literally anything and everything that I could possibly think of. Now, the first thing is going to be very basic. Most things are going to be very basic, but we're going to start with the most simple, is obviously your average win to average loss, right? And you might be saying, duh, Kyle, of course, but let's dive in more than just that. The reason why it's not just your average win or average loss, but also your average percent gain and average percent loss. And even on the third column here, I call my average net gain to average net loss, but it's really just cents per share. Why I call that net when I first made it, I don't know. It just call it cents. But the reason why I want to track all three of them is because I want to know the risk reward of all facets of that trading or of that style. I want to know, is my risk reward for the actual dollar size for wins and losses make sense, as well as with percentages? Because there's going to be times and months and periods in time where, let's say, my risk reward for my gains is really, really good. Back in January, I made almost $8,600 per win and only lost $2,500 per loss. That's a great risk reward. That's well over 3-to-1. That's awesome. Now, if you look at here, 25% average win to about just under 8% average loss. That is also a really solid above 3-to-1. However, I've had months where that is not the case, and it actually will tell me different things about my strategy. So for example, if we look at a month here, right here, perfect. Last February 2023, average win of 4,300, average loss of 3,400. Risk reward's not good. I mean, that's barely, so is that even 1.5 to 1? That's not even 2 to 1, right, guys? We're not even 2 to 1 risk reward. And again, in general, you probably want 2 to 1 at the minimum. So in February of last year, not so great. We didn't do good on the risk reward in the dollar sense. But look at the average gain to average loss percent wise. We're at 11% average gain, but a 2.2% average loss. That is incredible risk reward. That's staying like 4, maybe over 5 to 1 risk reward on the percent side. So what that immediately tells me is that probably most of my winners for this month were really big in the percent. Like I actually caught a large percentage of a stock's move. Again, 11% is pretty solid. However, I wasn't sized accordingly. I wasn't as big of size on the winners as I should have been, because if I was as big as size on my winners as I was on my losers, these should all be pretty equivalent. Meaning, if I am full size on my losers at $3,400, to hypothetically here, and I'm only losing 2.2%, well, full size on my winners at 11%, what is that ratio? I mean, this means I should have, like, my average gain should almost be 3 or 4 or 5 to 1 to this. I mean, I should be up in the 9, 10, maybe even 11K range for average win. I don't need to be exact and exactly need to know what it should have, could have, would have been, but you see that immediately it tells me that. I can immediately look at these 4 stats, not even including the average cents gain or loss, but just looking at the percent to average dollar and being able to see, my risk reward on my winners was not there, right? It was not as big of size on my winners as I should have been, because if I was, this should be well into an average 5-figure win per trade, or per, $10,000 per trade on a win. So there's that aspect, right? And in terms of what to expect from your trading, and I personally trade small caps, whether you trade all different kinds of markets, your stats are going to be very different. But from what I've seen, not only in my trading, but also just a bunch of other people's trades that are also in the small cap, maybe momentum style space, is typically your risk reward is going to be in the 2 to 1, 3 to 1, 4 to 1, right? Again, it's not perfect. There could be more, it could be less. That's generally the average. Again, my personal average over my career has been about 2.5 to 1. But again, I've I've always been maybe a more emphasis on the win rate, which we'll talk about soon here, than on the risk reward. I've been very much consistent with being able to give up risk reward in exchange for a higher win rate, a bigger chance of winning. So that's my own personal preference. So don't beat yourself up if you have like a 2-to-1, a 3-to-1 and think you're not good enough. That's not true. Many profitable traders have that kind of risk reward. So that's something to expect maybe for your potential trading. And the same thing for the average gain. But again, how much in the average gain? Well, over the course of my career, looking at, again, a lot of profitable traders, the average gain could be anywhere from 4, 5, 6, 7%. On the high side, I think my average is like 10, 11%. And again, that's because I'm a typical trader that likes to look for the big move, right? Not the whole move, but the big move versus someone who's maybe like a scalper and will just scalp 1, 2, 3% a day all day long, right? But again,
ever dreamed of trading like one of the Clovers? Well, it all starts with the right broker. Clover Trading and Centerpoint Securities have teamed up to supercharge your trading experience. By joining Unlock the Power of CP Edge exclusively with Centerpoint. We're talking top-tier trading tools worth over $6,000, all at your fingertips. Get ahead with real-time scanners, cutting-edge news, and a tailor-made trading journal. Experience trading like never before with superior short inventory, personalized support, and interest on your idle funds. Plus, you can get competitive pricing that fits your trading style. Ready to elevate your trading game? Click the Clover Trading link in the description below to get exclusive deals with Centerpoint Securities. Now let's get back to the content.
Regardless where your average win is, whether it's 4%, 8%, or 12% in that range, it's gonna also be risk reward wise to your losing percent, right? So if your average win is 4%, your probably average loss is gonna be 1, 2%, right? Vice versa, if it's 10% like mine, I believe my average lose percent is around 5 to 6. So not as good as my risk reward of my dollar size. Now it's not complete 2.5 to 1, but it is around that 2 to 1 kind of range. So something to keep in mind, something to, have expectations about your trading when you get to profitability, consistent profitability over a longer period of time. And again, the longer you trade, the longer period of time that stretches on, you're going to get much more refined stats in your trading as you trade through a bunch of different market environments, which can obviously change your stats, right? Now, the next thing is also looking at your risk reward of not your averages, but your biggest gains and losses, right? Which is why, again, if you've seen my monthly recaps or any of my videos where I show this calendar, it's why you see down below here, right? I've never actually explained it in detail like this, because anyways, I've always felt self-explanatory, but again, it's always good to dive in, good to review, and if you're ever completely new, this is also new to you. This is, I don't weigh too much of this on as much as I do on the average, because again, the average is more important, right? I want a bigger sample size of how my strategy actually plays out in the market, not just one huge loss or huge win, but nonetheless, I want to track it just to know that my risk management is in check. If there was a month where my biggest loss is way bigger than my biggest gain, then I know my risk management is a bit off, right? Not in terms of averages, but maybe I let myself get too stubborn. Maybe I let a loser just run completely against me way too far, way too long. Maybe I was just way too oversized in certain ticker and took a loss and it was just way bigger than I was willing to accept, right? Whatever it is, I want to know that in that period of time, right? I want to know if that's in check or not, because if it's not and I have a huge loser compared to my biggest winner, that's going to really change the bottom line of your profitability, right? Many of my unprofitable months over my career has been usually because I've taken one big loser that's been too big for, what kind of money I was making that month, and hence gave all my chances away of making money that month, right? So that's something I keep in mind. I just want to see the risk reward wise on just the biggest win and biggest loss, not so much on the biggest percent gain, for the same reason like I talked about, where, in this previous month here, you can see the risk reward in terms of if I'm over or undersized on my winners based on my percentage gain compared to my dollar gain or loss. But when it comes to biggest percent gain or biggest loss, I don't look at it too much, because again, this is where things get tricky, where it's all about sizing, right? I could lose, again, like in January last month, I lost 43% of my biggest percent loser. But guess what? That was a trade where I had an extremely small size and I had a very wide stop. So does that mean my biggest percent loss was also equal to my biggest gain loss? No. Right? It's going to be different trades. It's going to be different management of whether my trade plan is different or not. So I don't put too much weight on this. If I had a bigger percent loser that's bigger than my biggest percent gainer, I'm not going to, criticize or critique myself too harshly. I rather just dive into a trade and see why that is. And then from there can critique myself harshly if I, made a mistake, if I did let a loser go against me, and if I did not stick to my trade plan, so to speak. But again, if that was part of the trade plan and you just happen to be a bigger percent loss than you're normally used to, if you're trying something new, for me, sometimes I swing trade some things and I put pretty wide stops, that's a possibility. right? So there's something to note there. The next thing is obviously win rate. And again, there's a lot of expectations people have about what their win rate should be. Over the course of my career, not only looking at myself, but a lot of traders, it could be a very wide variety. And there's always this kind of train of thought or school of thought among the community I've seen online, whether people value their win rate or their risk reward, right? They're like almost in two schools of thought. They're not in the mix of both. And I've always been in the boat that you do need both. You need to know both. You need to track both because both are interchangeable with each other to how profitable you could potentially be, right? So let's do an example. Let's say I am a 1-to-1 risk reward trader, right? I make 2,000 and lose 2,000. Very bad, right? Not very good in the risk reward department, but it's 1-to-1. I'm not necessarily negative. I'm not like losing $2,000 and only making $1,000, right? That would be the worst, one of the worst in the wrong direction, essentially. But let's say my win rate is 80%. Well, that means I'm going to win 8 times out of 10. And if it's 1-to-1, that's technically a profitable strategy. Now, granted, there's not many strategies out there that win 80% of the time, so that's kind of rare. That's kind of a very hard strategy to come by. So I wouldn't, lean so heavily on finding a strategy like that. On the flip side, you could have a win rate of 25%, whereas, 1 in 4 tries, you're only winning. And 3 in 4 tries, you're taking a loss. You're taking a lot more losers than winners. However, if you have a win rate of, I believe, 4-to-1 or 5-to-1 or more, you actually will be profitable, right? There are many traders I've come across that have a very low win rate. Their win rate is not impressive by any means. They're actually excessively more wrong than they are right. But when they are right, they're right big. They're making 5-to-1, 6-to-1, 7-to-1, maybe even 10-to-1 or more. So they don't need a lot of winners. They just need quality, right? It's a little more quality over quantity kind of idea. For me personally, again, I am somewhere in the middle where, again, I have a positive risk reward, like I said earlier, of 2.5-to-1 over my averages. And my win rate is around, actually pretty accurate to this January here, around 62%. That's generally been my average on the win rate over my career. And so again, you do the math, if you're winning 62% of the time, and every time you do win, I'm winning about 2 or 3 times bigger on average than when I lose, that is a profitable strategy. You can do a simple numbers game of just every time you win, I win 3. Every time I lose 1 point. And again, you're going to win 6 out of 10 times. Bingo, do the math, you're going to be profitable, right? Now, granted, that's true if you don't have any huge losers. Again, that's why we talk about knowing what our biggest losses are, because again, I could have a 62% win rate and a really positive risk reward, but if I have one big loser of say $50,000, well, boom, that could really detriment the bottom line. So again, that's why all these stats I'm mentioning kind of need to be all in one encompassing big picture thing that you need to know all these things and constantly evaluate all of them, so to speak. Now, the last thing I'm going to mention before we go into the next particular stat is with everything I just mentioned, whether it's win rate, whether it's average win, average loss, average percent win, average percent loss, you could get even more advanced, and this kind of gets into the intermediate style of things, where you can start looking at these stats for specific setups or specific sectors or specific biases. Like, I like to know what is my win rate when I'm long? What is my win rate when I'm short? What is my average win when I'm long? What is my average loss when I'm short, right? All these things, and I actually track this in my monthly reviews. Again, as I have a monthly calendar, I also have monthly review sheets here where I'm looking at, okay, my listed win percentage versus OTC was 61%, just roughly. My OTC win percentage was 100, probably because I didn't take many OTC trades that time. My long win percentage was 72%, whereas my short win percentage was 58, right? A little bit on the lower end. But again, it averages out to up here, but nonetheless, I'm getting those trades back. I'm getting them more diversified or more separated, so to speak, knowing where and when and why are my deficiencies, proficiencies, whatever it is separated so I can see the two. Sometimes not enough just to see the big picture here, but actually to look more in depth where I won no times long this month. But if I had an 80% win rate, so to speak, and my average win rate came out to 60, well, that's great, but that means my long trades totally hurt my win rate this month, right? So again, that's just as a basic example, but that's something to, take yourself to the next level once you kind of get the basics down of just these, face value stats. Now, the next thing I want us to track, or that I think you should track, is your profit factor. Now, this is going to kind of be a 3-in-1 kind of idea here. And so what is your profit factor? If we go to my monthly reviewer, this is where also I track profit factors. A profit factor is basically your gross profit over your gross loss. So it's going to be your gross profit divided by your gross loss gives you your profit factor. Essentially what that tells you is how much money have you total made if you add up all your wins, only your winning trades, what is your gross amount you possibly pulled out of the market? And then your gross loss, just add up all your losers, right? What is the amount you've actually given back in the market total? And you divide those by each other and you get your profit factor. Essentially what this tells me and tells you is how much money you've kept in the marketplace. So in January of last month, I had a profit factor of 5.28. Incredibly good, guys. It is not normal to have a 5 profit factor. In fact, if you have a 2 profit factor or more, you actually are keeping more than half your gains. Again, it's simple math, right? If your gross profit was $100,000 for the year, or for the month, whatever time period, and your gross loss was 50,000, well, you do 100,000 divided by 50,000, that comes out with a profit factor of 2. 100,000 is double the size of 50,000. You net profited 50,000, right? Because you made 100, you gave 50 back essentially, and you have a profit factor of 2. It means you're keeping at least half your gains. That's typically my kind of standard. I would like and have made sure I've tried to trade with a profit factor of 2 or more, just making it reassuring that I'm keeping at least half my gains, if not more. However, on the flip side, I'm generally also not having a profit factor of 3, 4, or 5 or more, unless we're in a very hot market. And again, January for 2024 at the time of this recording was a very hot market. So that explains my profit factor at 5.28. But again, over the course of my career, it's much closer to 2. It's like the low 2s. So that's kind of gives you some expectation. Like I said, with the other previous stats kind of being more intermediate and kind of dissecting why that is, my long profit factor was 46. Insane. Is it ever going to be 46 again? Probably not. Why? Because I took one loser on the long side of 2,700, but I actually made $126,000 on the long side, right? January was a very, very big long side kind of month for me. There was a couple of trades where I made a lot of money on the long side, and again, only had one loser, I believe, of 2,700. Hence, my profit factor is going to look insanely outrageous, right? That is not an average. In fact, I believe my profit factor is actually lower when it comes to longing. If not, it's below 2, if I'm not mistaken. So take that with a grain of salt. That's what makes it different about this month. But if you look at my short profit factors here, I have a 2.34 to 1. That's much more aligned with my averages long term. And again, making $89,000 and then, losing $38,000, you divide the 2 by itself, you get 2.34, right? So that's a profit factor. I like to look at those things. I like to acknowledge and know those aspects, those stats. Now, the last little tidbit I want to share before closing it out here is all the stats we've just gone over. That's great. But if you want to take it to even a higher level here, you can actually graph them. So whether it's your biggest gain, biggest loss, how many trades you've taken, like I've done here, your percent gain, your cent gain, your average profit per trade, like I said, maybe your expected value per trade, your win percentages, long, short, and overall, just in general, average week, average month, the percent gain of your overall accounts, all of these things I have actually graphed to some degree in shape and form, gross long P&L, right? All these stats, all these graphs. I've done this for most of my career. Why? Because it kind of takes the numbers of just looking at numbers right here, like if we go to a monthly P&L or my monthly calendar or review, whether it's here or here, it goes from just taking the numbers and then actually be able to give you a visual representation, and not just a visual representation of one month, but all the months together, right? So that's kind of what inspired me to make all these graphs. And it's very telling for me. I can't trade my own graphs here, but I have started to notice like signs of support and resistance, like where I tend to lose a lot, where I tend to actually make a lot. What's my threshold for how much I can possibly make in 1 month over any market period or lose in any market period? All of these things I found to be pretty impressive, and I wouldn't know that had I not actually graphed them and be able to see them visually. So anyways, if this is the kind of stats and stuff that excite you as much as it excites me as you hear my voice, this is why I've made this spreadsheet of mine, this trading journal of mine, available to you. I will put a link in the description below. For a long time, I didn't want to kind of release it because it was kind of like my baby, right? But again, I, as a teacher and as someone who loves to teach stock trading and just tracking stock trading, this is something that I think is super valuable. And if anyone finds interest to it, feel free to click the link below. So anyway, guys, thanks so much for watching the video. Make sure you like and subscribe, and have a great rest of your day. Peace, everybody.